the market is looking really good. I mean, you can't deny that. 100 points higher for the Nifty now. The Bank Nifty is up almost 300 points, turning out to be a sunny day on Dalal Street. We have a lot of stocks. Divi's Labs is up about the biggest Nifty gainer right now. SBI Life, IndusInd Bank, UPL, SBI itself, Tata Steel. In fact, Metals is doing a good jig this morning. Tata Steel, JSW Steel, Hindalco are all your big gainers right now. But one space that we're looking at very closely is the real estate space. DLF is the next corporate that we're speaking to. The company has seen very good momentum in the first quarter, and now they have a launch pipeline of 35 million square feet over the next few years with a sales potential of 47,000 crores. To understand the timeline and the outlook for the full year, Ashok Tyagi, the whole-time director at DLF, joins us now. Mr. Tyagi, always a pleasure speaking to you on CNBC TV18. Hope you've been well. Thank you for joining in. Can you tell us about this execution timeline of this 35 million square feet over the next few years? What are we looking at in the first 1 year? And where are you seeing the maximum amount of potential now?
Okay. So good morning, Sonia. Clearly the one thing that's differentiated the last 6 to 8 quarters is an increasingly secular rally in the property offtake across segments, across geographies. So it's no longer just a single product market which is doing better than others. Obviously the Gurgaon market, which is our core market, continues to do well in the super luxury space, in the luxury and premium space, and in the mid-income space. We had a very successful launch in Delhi in Q4 of last year, which continues to have its the subsequent sales going strongly. We had a very strong launch in Chennai in Q4. We are proposing to do a reasonably big launch in Panchkula within this quarter or early next quarter. So clearly, the new launch pipeline and the sales offtake is something that is definitely getting stronger across. Yes, I'd say the last quarter there's been maybe the first trends of some headwinds on account of the interest rate hike, which has tended to maybe marginally slow down the offtake vis-a-vis, say, Q4, but I don't think it's anything which is seriously threatening the entire sales strategy of not only us, but of most of the organized players, as you must be seeing the numbers of everybody else also.
Sir, if you can give us some numbers, the bookings in Q1, for example, you had an average of 2,000 crores bookings. Of course, it was a low base, so there was a good growth. It doubled compared to last year. But on an average, what would the quarterly bookings look like this fiscal?
So Sonia, while obviously internally we are trying to do better, but what we had guided the market also was that an annual bookings target of about 8,000 crores, which is 2,000 crores a quarter. So Q1 we definitely came in on. I think we should continue with that traction very comfortably, and hopefully, towards the end of the year, that quarterly run rate should start improving even further. But we are clearly guiding, all of you to at least 8,000 crores annual sales booking for sure.
Mr. Tyagi, one would have thought that number goes up, right, after what you've done in Q1, to at least 8,500?
Prashant, hopefully it will go up, but right now we don't want to commit. It's better to commit 8 and deliver 9 versus vice versa.
Everyone has learned the under promise and over deliver trick.
Yeah, exactly.
Let's hope that
because
comes
I think
true.
all of us have paid enough price in the last 10 years of being ultra bullish in projection and then trying to catch up.
No, absolutely. Always kind of the right thing to do. Well, Mr. Tyagi, 2 specific things. I mean, these are deal related before we kind of swing back to broader issues. There was a story, I think Reuters put out a story saying that you were evaluating buying the Ambience Mall in Delhi.
No. So I know Reuters gave that story. So all that we know is that there's an auction notice that was issued out by the lenders. Frankly, there hasn't been any subsequent steps by the lenders on that, to the best of my knowledge. I honestly don't know. Neither have we reached out to them, frankly. It's an interesting mall. Obviously, if it ever comes to the public auction market, it's something that we'll want to look at closely and look at the data, the revenue numbers, the stickiness of the customers, etc. But right now, frankly, as you know, issuing an auction notice does not necessarily mean that an asset actually goes out to auction.
The story actually says it's got a starting auction price of $366 million.
No. That was, I think, the reserve price that the auction notice contained.
Right.
So that was the reserve price that the lender, I think, had indicated in the auction notice.
No, so it's not up for auction, and to the best of your knowledge, and okay.
No auction date's been announced, and there's been no data room that's been opened up to the best of our knowledge. So I mean, in that sense, at least we haven't got any subsequent information beyond their auction notice.
And if it were to come up for auction, you would evaluate it. If it were to.
Absolutely, sure we would. I mean, it's bang in the middle of two of our malls, Promenade and Emporia, just adjoining those. I mean, it's a great location for sure. But frankly, we honestly are not fully aware of the commercial mechanics of that mall and the rentals and all of those things, really.
Okay. Since we're talking about malls and the retail portfolio, Mr. Tyagi, your retail income had gone up substantially year on year, almost a 300% rise. But of course, I mean, same time last year was a very different situation. What are you looking at in terms of rentals? How much have they increased? Some numbers, if you can help us with on the retail side.
Yeah. So Sonia, I mean, just to put things in perspective, you are right that it went up by 300 times. But frankly, even at the end of Q1, our retail mall income is, I think, about, say, 80% of what its correct potential should be, So I think we were at about 600 odd crores, and we believe that on a full throttle basis, our retail mall income of the current retail portfolio should be between 700 to 750 crores a year, And that's obviously some degree of catch-up still happening but I think by and large, most of the malls today are doing extraordinarily well. As we have said in the past also, the luxury malls seem to be doing even better, So I think people just can't resist buying their next Louis Vuitton bags, in that sense. But and that's the reason we are extremely bullish on the retail sector. We have begun, building out 3 new retail spaces, one in Gurgaon, one in central Delhi, adjoining our Capital Greens development, and one in Goa, and we are doing the pre-design stage of putting our sort of iconic Mall of India, Gurgaon, which will obviously be hopefully the country's biggest mall once it comes up.
Okay, that says a lot when you're saying that people can't resist buying their next Louis Vuitton bag, and a Louis Vuitton bag is not cheap by any standards, right?
It's not cheap.
So it goes to show that consumption is coming back in a big way. Just want to talk a little bit about the office portfolio as well. Commercial lease rental income went up marginally. Actually, it hasn't come back in a big way. Why is that? Are you still seeing some slowdown there?
No. So Sonia, actually on the commercial rental income, it actually, unlike the retail, it never went down really. Okay. The vacancy. So I mean, the vacancy levels moved up from 5% to about 15%. But the 85% people who were occupying, there was no rental disruption there at all throughout even the worst days of the pandemic. The vacancy levels have begun reversing now. So I think from 15% vacancy level, we are now talking about 12% currently, and hoping to come back to that single-digit number by the end of the year. The mark-to-markets and the annual inflation cycles were slightly disrupted during the COVID period, and those are now coming back. And we believe that the rental growth and the rental trajectory should honestly come back almost completely by the year end. Our new downtown Gurgaon building of about 1.5 million square feet is now ready. It should hopefully go into the rent commencement mode by October. We have almost a 2 million square feet coming up in Chennai, which should also be coming up by middle of next year. And we continue to do more capex in both Gurgaon, Chennai, and in our joint venture with Hines. So I think the office build-out strategy and the leasing strategy both continues. The vacancy levels have begun reversing. And frankly, if this entire, what the Commerce Ministry is talking about, this new DESH guidelines come up for SEZs, I think then even the vacancy levels in SEZs, which have been a slight problem ever since the tax holiday, eclipsed, I think that will be a further fillip to the entire sector.
Right. Mr. Tyagi, the Ashoka Hotel, ITDC, what's happening there? What's the progress?
So I mean, the government did one road show, I think about last week, if I'm not mistaken, which we also went and attended. But I think right now, even short of the only thing we know is that it will be a leasehold property in a 30 years plus 30 years format. But beyond that, I think even right now, they are also in the zone of collecting the feedback from the interested bidders, sort of a thing, before they come up with a proper sales strategy for that. So that's a space that obviously, I mean, it's in central Delhi. So we did attend the roadshow last week, as was reported also. But beyond that, frankly, right now, I think it's still premature because I think the government and whichever is the regulatory body which is running that piece, I think that does need to do more homework before they convert into a formal sale process.
We reported recently that they want to put together one proposal, like one together, not separately for the land and the.
Yes.
So
there'll be land and the hotel, and I'm sure there'll be a combination of hotel plus commercial spaces. So let's see how it pans out.
Right. Yeah. But you'll be very interested, right? I mean, first you are interested.
देखिए ऐसा है प्रशांत that I mean interest is depending on the price tag.
Obviously,
you know, I mean for 1 crore you are interested, for 10 crores one is not. So I think let's see how it plays out. I mean the fact is that it is in the heart of Delhi. It will attract. We expect a lot of interest from a lot of existing and potential players. So let's see. I mean we'll obviously not be interested in doing something silly on the. It's not going to be an ego buy for us for sure. Just go to Ashoka Hotel. Let's see how it pans out.
Just one last question from me to go back to the base business. Are the spate of price increases that you took kind of all behind you now? I mean, you did take many.
No, so yes.
Yeah.
So just a number of our products had price increases during the last year. I'd say that it frankly depends again on the absorption of the. So if the prices say in the independent floors in DLF city Gurgaon moved up from say 15,000 to about 18,000-19,000 now. So we'll obviously before the next launch we'll see the absorption pace of the current price points, and if we believe that there's a small proportion to hike it further, we'll definitely want to continue on that exercise so that it also brings in a degree of aspirational feeling to the existing customers as well. But yes, I mean I think prices do seem to be stabilizing for sure, and clearly given the interest rate headwinds, I think one should not get too adventurous in pricing right now.
The super high end, the Camellia project is all sold out, Mr. Tyagi?
I think about 60 units are left, or 50 units are left out of the 430 now. 380 odd have sold out.
Okay.
Fair enough, Mr. Tyagi. Thank you very much.
Sorry. No, I just had one more question before we let you go. Any plans to monetize any more assets, either traditionally or through the REITs route?
No, so I mean, REIT, as we have said, Sonia, in the past also, that we continue to work on the REIT, so we are doing all the due diligence and, there's a lot of documentation work, etc. that's involved there. All of that is going. But frankly, whether we do the REIT or not, and at what time do GIC and we want to do the REIT, I think is still sometime in the future.
Okay, well, Mr. Tyagi, thanks a lot for joining in. Have a great one, and hopefully this trend of consumption picking up, hopefully it will sustain. It's been a challenging few years, but now things are definitely back on track. But moving on, the NDTV stock has been in focus.